5, 4, 3, 2, 1. Good morning, traders. Today is Friday, August 19th. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome. All right, well, what are we looking at here in the market? Lots happening this morning. Things getting very, very interesting. So obviously, if we step back and we look at the daily, we had excess when we had this big move to the upside. Two ways to balance off that excess. We can go sideways at higher prices, or we can pull back with price, looking for support lower. And then that is how we balance off the excess. So we got the signal we were definitely bouncing. Yesterday, we were kind of left uncertain. It looked like we were trying to turn around. It looked like yesterday's low was going to act as a balance area low, and we were going to turn around and head back up. So the overnight pulling back down tonight, pulling us lower, is a little bit bearish to see. So we're going to be opening with a gap down. So to the upside, that'll be the first sort of level to watch. And then just while we're zoomed out here on the daily, I wanted to point out the lows from the overnight correspond very nicely with that trend line from the previous balance area. So this is one of those cases where sometimes previous resistance becomes support. And so this may have just been a back test of that support. If that's the case, we could turn around and head higher today. So essentially the two areas that I most focus on big picture is this area right around here, around the overnight lows. Let's call it 4250-ish. Looking for support in here. If that was just coming back to back test that previous high, we should be able to find support in here and turn around and start to head higher. But if this area breaks, well, then we would look for a look above and fail of that previous balance area. So if that area from the overnight low breaks, well, now guess what? We're back inside this previous balance. And so things get very bearish, as we don't know, but we might need to head back down to the opposite end. That will also correspond nicely with that 50 moving average on the daily. So a swing trader would love to short a 200 to take profits at a 50. So that's not unreasonable to consider if we don't find support at those overnight lows today. Okay. And as far as continuation to the upside, obviously the gap fill is the first target. So when the market opens, we assume with the overnight inventory being net short, that the first move will be to try to fill the gap, getting back up to yesterday's low, and then just observing how the market reacts when it gets there. Are we able to get back up into yesterday's range, or do we get resistance? If we get resistance, it is bearish to head down and test the support. And if we get back into yesterday's range, then we can get, I wouldn't call it bullish, but we can basically get less bearish and look for, rotation basically inside this range once again. So we'll start looking for support, resistance, support, resistance, support, resistance, like that. So yeah, gap fill, first order of the day. Can they get to yesterday's low? It's also worth noting if they do poke down here and find some support in this range where the overnight did, they would be doing a very nice job of repairing all the weakness left behind. Another way of phrasing that would be this could give regular trading hours traders a chance to get in at that support, at that better location, stronger hands to get us up to the opposite end. Let's pop over. We got a couple minutes here. Let's take a look at the queue real quick. It could actually still make, if the market were to open on the queue here today, if the market were to open, push up into yesterday's range, not get any resistance at yesterday's low, and continue up into the range, I could see this as a potential balance area low. that maybe that was the tag they needed to get up to the opposite end of balance. So actually, I kind of look at both the markets exactly the same. Can the overnight low hold? If it breaks lower, that's very bearish. Can yesterday's low hold as resistance? If it does, that's bearish. Anything else, we're heading up towards the opposite end of balance. Or just rotating sideways. So let's see what happens. Oh, it's also worth noting that if yesterday was the monthly options expiry, sometimes the couple of days that follow that, the market seems to be a little more free to make larger, more sporadic moves on thinner volume. Those moves cannot be trusted. They are short-term traders. So that's something to look out for today. Sometimes it's like the mechanism of the options expiry by the end of the month is like there's so many things that kind of keeps the market in a tight range. But then once they roll it over and they kind of release the tension, the market can make like a big move the next day or two. That's not like a prediction that it will, but it kind of makes me think that the sideways grindy day like we had yesterday is less likely today. That we should pick a direction and get some volatility. Chop Fan, good morning. Could you possibly wait 10 seconds? I gave you 5 this morning. Did you notice that? No, the reason I start talking right away once the stream starts is because a lot of people watch the stream later in the day. And so it's kind of weird if like they click the video and then it's just silent for like 10 seconds or whatever. So I like to start right away for them. But you can always scroll back. Remember, in the first 5 minutes, you're not going to miss anything. So you can always scroll back to the beginning, listen to it real quick, and then come back to real time. Speaking of real time, I would really love it if you guys would use this time to click that like button. 2 minutes till the market opens. And we're off. First order of business, can we fill the gap? If we do we get resistance at yesterday's low? 42.64. TV, guten Morgen. All right, passing back through the opening price is a little bit bearish. That's a potential gap and go. If they push away from the low from yesterday and come back up through that opening price, One trade you could consider is a gap fill trade where you go long at the opening with your stop below wherever the market makes its low. I would say today it's not the greatest risk reward. Right now, for example, it would be like 1-1. But just for future reference, if it fails to fill the gap on that first attempt, tries to go lower, and then comes back for another attempt, it's good for a gap fill trade with a tight stop below the current low. So you'd be stopped out of that trade right now. But that is bearish to see. Is a gap and go. So now we got 2 weak references below in need of repair. 42.55. If we repair the first one, is that enough to head back up and fill the gap? If not, we target repairing the next one at 42.51. If they repair that, is that enough to turn around and fill the gap? If not, we got our last bit of support here before things get real bearish real quick. Mateus, NQ gap filled. Yep, gap fill, gap and go right now, but that's good taper on the low. So I wouldn't get bearish by any means as long as they stay above that opening price. You got support all the way down to about 13,375. Then it starts to get bearish. Mateus, overnight low, yeah. They break that overnight low, they get resistance. The market is going to go much lower from there. So remember what I said about the daily. We're going to retest this support. So if that breaks and we start to head lower, which is the overnight lows, it's going to crash and burn. But if we can find support here, if we can continue back up into yesterday's range, well, then we're balancing. No worries. All right, passing back through the open again means they're going to try to fill the gap. Do they fail again? Generally, I like to see at least 100 contracts at a high, particularly because it's, inside the gap there. I would say that slightly increases the odds. We're going to have some more trade up in here, but it is good taper otherwise. So if the market were to turn around and head lower from here, it would have good taper at the high. Just seems very strange to me that they'd run out of business that close to a gap fill. But passing back through the open again means they failed again to try to fill that gap. Charles, what does that mean? Is it bullish or bearish? Just tell us. Should we be long or short? I could literally see a scenario to be both right now. I could see a scenario for a gap and go short, and I could see a scenario for a gap fill long. So that means wait for more information. And it really will be. If we repair these weak references and find support and come back up, very bullish. If we fill the gap, find resistance and head back down, very bearish. And I don't feel rushed to know ahead of time which it's going to be. All right, that first weak reference is repaired. Is shutting off that magnet enough to head back up and fill the gap? If not, the target becomes 42.51. Lee, what do you mean by good taper? This is a perfect opportunity. We got good taper on the high and the low. You see how the volume is slowly fading off? You got 8,000 contracts, 7,000, 2,100, and then 43. That's good taper. Less and less people willing to do business, the higher the price goes. If fewer people are willing to do business up here, it means we got to pull back down, looking for people willing to do business lower. And then the same thing on the downside. We're creating good taper on the lows, so we're running out of people willing to do business when we push down, and we're having to push back up looking for them again. That's just a sign of uncertainty at this point. But the reason I was mentioning the high was because of those 43 contracts. It is, you could call it a little bit bearish that it has good taper in that it ran out of business, but the fact that only 43 contracts traded up there means there is probably still some business to be had. So recognize the taper, but don't obsess over it because that's kind of a contradicting signal. All right, there's the second week reference repaired. Now, if this is not enough to get a gap fill, I will switch to bearish and be looking for resistance moving forward. We should find support here, or things get bearish. All right, so NQ pushing below the overnight low is bearish. That is an official red banner bearish right there. You're looking for resistance at yesterday's low. If you don't get resistance at yesterday's low at the halfback, 13,387, that resistance is good for continuation lower. That is a gap and go. Clear as can be on the NQ. Literally just needed to fill it. And then they crash and burn. That is a sign the sellers are in control of the market. Now let's see if the ES is going to crash and burn too. Okay, does previous support start to become resistance? This area around 4250? All right, folks, I'm bearish. That is a gap and go. So I remain bearish as long as we remain below the opening price. I am looking for resistance to sell for continuation lower. And as the ES makes its way to its overnight low, it is worth noting what I mentioned earlier, zoomed out on the daily, that often if you re-enter a previous balance area, it can cause you to trade towards the opposite end of balance. So if these overnight lows fail for the ES, it could bring in new selling. Mateus, how do you approach on inventory net short here? That it's very bearish, that they can't even get the inventory back up into, or they can't even get the ticks back up above the negative 1,000. Like, that's crazy. Of course, they will need to, right? At some point, the market will have to cool off and come back to the zero line. But the fact that they haven't been able to yet is bearish. That they'll stay, they won't fill the gap on when they do. Will be stuck below yesterday's price. So that's why I say we may push back up into here looking for resistance. But I'm bearish as long as we're below that opening. Because if none of these sellers in here felt pressure to get squeezed out yet, they'll keep holding and new sellers will start to pile on. I suppose if I was an overnight trader, my favorite thing would be gap days, because they would give me a signal very early on whether I should hold my trade in what would be the overnight for me. Like, is this thing going to head down to the next major support? Not filling that gap, first thing in the morning would be my signal. So that's why gap and goes are so powerful. It's that new inventory joining forces with that old inventory to push the market. Just feels like more sideways, RK. Yeah, I bet if you expand it out, it just looks like another rotation. Yep. But now you're about to lose all your lows. All the higher lows you had to create to get that momentum. Okay, so there's potentially some support just below the overnight low here. We may just dip below and then pull back up into the range. But as I said, as long as we remain below the opening price, I'm not looking to go long. I would rather sell resistance somewhere between there. And if it pushes below the overnight low and comes back up and we get new sellers there, we get resistance at the overnight low, that is also very bearish for continuation. Bitcoin's not looking good. Bitcoin losing all its support here. I mean, technically, you could kind of say if they can stay above 20,700, they could make a higher low, kind of. But that's just wishful thinking. More likely, this is the rollover and the beginning of a new trend down. Keep a close eye on the corn in the days to come. Scoop all Bitcoin to 10,000. Well, obviously, it's way too early to make that call. But if they don't want Bitcoin to 18,000, they better find support soon. Above 20. Invictus, poor low. It's a weak low. Poor, it's a strange designation that I came up with on my own, so it's confusing. But the difference between weak and poor is weak is if it's a reference from a previous day or from an overnight. Poor is if it's a reference from the same session. So yes, this is a weak low, increasing the odds that we're going to push a few ticks below. Okay, so in a perfect world, if you were a bull, you'd want to see that right there. You'd want to see at least 2 ticks of excess. And then you'd want to see the market turn right back around and be able to get back up through the halfback here. Pretty much every other scenario that exists is very bearish moving forward, including if we push down and come back up and then get resistance at yesterday's low. We get resistance at 41. That is very bearish. And we can start, if we get resistance at the overnight low, we can start considering the poor low at 42.03 as a potential target to the downside. But Charles, won't it be a very long grind to get down there because there's a ton of support in between? Yeah, it likely will. It'll be one of those annoying days where like you think it's going to turn around and then it goes lower. And you think it's going to turn around and it goes lower. And you think it's going to turn around and it goes lower. But resistance at the overnight low is a signal of a look above and fail of the previous balance. And the opposite end requires repairing these first. Something to consider. Okay, pushing into the first potential support here at 42.34. And then we look for resistance at at the overnight low, 41. Chris, thank you very much. Appreciate it. Smash that subscribe button. Join the party. I'm here every day for the first hour of trade. Speaking of being here every day for the first hour of trade, man, the work I put in. Man, the effort I exert to provide this service for you. If you wouldn't mind just sliding your hand over to the mouse and clicking that thumbs up for me in return, I sure would appreciate it. Smash that like. as they say. Nap the week after next. All right, ladies and gentlemen, you heard it here first. Resistance at the overnight low is bearish. Pulling the value area down to the low of the day is bearish. And if that B period breaks the A period low, the initial balance being to the downside will also be bearish. So there's a lot of bearish signals here, indicating the market is looking for continuation to the downside. But as I said, I do think it's going to be one of those very slow, grindy days down, where all day long it will feel like the market is about to reverse. And then an hour later, you just suddenly find yourself at lower prices. AJ, thanks for the sub, brother. Welcome. Scuba buyers are trying. Buyers are fixing to get wrecked. But yes, you're right. They're trying. They can get a pullback. Yeah, I mean, they can get back up to the halfback. But I reckon as soon as we get back to the zero line on the ticks, the next wave of sellers will be waiting. They'll make you think it's going to reverse and go higher. They'll convince you. You'll be sure the selling is done. And then you'll randomly find yourself down at like 42.34. And you'll say, what the heck just happened? All right, second attempt, looking for resistance at the overnight low for continuation to the downside. Nap, I hear the Rocky theme in the background for the buyers. Not anymore. Now they're screwed. Now they got to pour low. To repair the pour low, they've got to start taking the initial balance to the downside. They start taking that initial balance to the downside, there's going to be new people who maybe were neutral or even bullish who are going to start to change their mind and get bearish. And then new sellers pile on. So we expect to push away from a pour low into resistance to come back and repair. Create the pour low, test the resistance, come back and break it. Okay, so the NQ has that initial balance to the downside, and it's worth noting that they are pushing into the very last major node of support that we have, pretty much right now at about 13,290. If this area breaks, you could look for a big move lower on the NQ as well, as often the market pushes through low volume areas very quickly to the next major node of volume. So pretty much if the current low on the NQ breaks, you could be looking to head as low as the 13,190s. So potential 100-point drop there. On tech. Andromeda, what time frame volume profile is that on the left? So the volume profile on the left is for the full session, so from the open to the current time. And the one in the middle is just the current 30-minute period. This one is from the overnight. And then the one all the way over here on the left that's in orange, that is the cumulative volume of the last 190 days, all combined together. Okay, low remains poor and in need of repair. Design knob. I knew you'd be showing up. What's up, brother? I think you might be right. Pappy might be cooking. Might have some grits on the griddle. Okay, there's the repair of the poor low. Andromeda, why 190 days? Honestly, it's a totally random number. I had it set to 90 before, and then we pushed up to an area where there wasn't any volume there because it had been more than 90 days since we were in that area. So I just opened up the settings and put 1 in front of it, 190. That simple. You just need to see wherever the volume was when you were here before. Scooball, not much liquidation. Little stronger hands are buying there. Yeah, I have a feeling this is what it's going to be like all day. I feel like we're going to keep pushing into support, and it's going to keep feeling like they're about to bounce. And then randomly they head back down. It is often the case when you look back below a previous balance area. Which we are currently now doing. It's like the weirdest thing, man. I can't explain it, but it always feels like that. All day long, it feels like it's about to go back up. You're like, oh, it's going to go. And then like randomly at the end of the day or the next day, you're down there at the opposite end. Can't explain it. So at this point, we need to see those ticks get above the zero line before we even think about the buyers being strong. Before we even consider it. Invictus, it seems like a possible runaway market is setting up. We do not get a pullback. I imagine FOMO is setting in for traders. I'm not worried about the FOMO. I'm more worried about the fear. The liquidation. The panic when that sets in. Then things get interesting. Scuba, but the sellers at the lows are rather not strong ones? I would disagree. I think the sellers are in control. I think they are the strong ones. Maybe not the guy who sold the absolute low tick, but in general. Jeremy Jones. What song is this? What's the melody? Bad Moon Rising. That's what it is. So just imagine how hard the buyers had to work from the open this morning. How much more of the inventory was net short. They had to buy and buy and buy and buy. They had to work so freaking hard. They had to do so much buying to get back to a neutral place. But where did price go in that time? It just went lower. We opened all the way up there. So that is bearish to see. Resistance at the 0 line. How much longer will these buyers keep fighting if they keep getting nothing for it? Scooball, it depends who's buying. Well, yeah, I'm asking the question as a thought process. We'll find out. Yes, if they're good, strong hand swing traders, they'll go fill the gap and then we'll know. I don't think that's the case. I think the sellers are in control. I think the swing traders, the money you're talking about, I think they're waiting at the 50 simple moving average on the daily. And right now, I think it's just day traders. And with the options expiring yesterday, the market is released from its tension. It's free to move around a little bit, have a little volatility. And I think those day traders pick their direction. But I've been wrong before. I reserve the right to change my mind the moment I finish speaking. All right. Well, as we get ready to print the C period here in a couple minutes, let's just zoom out and take a look at where I'm seeing us for the day. So my opinion is the same. Okay. And I'm going to try to make my case because I have a feeling some of you are going to get on the wrong side of the market today. And if there's a way I can help you to either not lose money or maybe make a few bucks along the way, I'd love to be able to do that. So two of the most potent signals that exist for bearishness within market-generated information is a gap and go to the downside, where the market opens at a lower price and it is not able to get back into the previous day's range. That is pretty much the second most bearish signal you could possibly get. I would say the number one most bearish signal you can get is a look above and fail of a previous balance area, which is coming back down into the balance here. So we have just gotten two of the most bearish signals that you can get first thing in the morning, telling us that the highest probability today is that the market wants to go lower. Now, it has also been my experience, as I've mentioned a couple of times, that these days, in particular, the look above and fails of a previous balance area where you're heading back down towards the opposite end, these days are the hardest to be short. Without a doubt. They are the hardest freaking days to be short because all day long, the market, it will just fool you again and again and again. It'll just keep making you think it's finding support and it's going to turn around and head up. So any of you that have been feeling that way so far this morning, anyone who has been looking at the market today and convincing themselves that buyers are stepping in to take charge, I would encourage you to just flip your perspective and stay focused on momentum to the downside until you get a signal that momentum is broken. Okay? So I would call those signals right now either getting above, I was going to say halfback, but they just moved halfback a little lower. I would say like 42.50. Okay, this area right here. If the C period is able to get back above there, I could look for a gap fill. Okay, I could get bullish for a gap fill. But as long as they continue to get resistance in there, that is a look above and fail of that previous balance area. And that is bearish. Okay? The other alternative is if the C period immediately trades lower and it starts one time framing to the downside, meaning the C period gets below the B period, I would remain bearish no matter what all day, as long as each 30-minute TPO stays below the previous high. Okay? And today will be one of those days where you will be forced to ignore your instincts and trust the market-generated information. It is also going to be one of those days you don't want to just get short and stay short all day. You want to sell resistance, buy back on support. Sell resistance, buy back on support. Because it will be a slow grind to the downside. Okay? So I'll be wrong if we get back above 50, but my opinion, this market wants to go lower. And with that, I bid you farewell, and I wish you a happy day and a happy weekend. I will see you back on Monday morning. Also, if you've been thinking about joining the book club, you're thinking you want to join us the last Wednesday of the month, make sure you read. This weekend's a great chance. Reminiscence of a Stock Operator, available wherever books are sold. Oh, and if you wanted to take the e-course, by the way, link in the comments there.